Hi, welcome to the market alert for Friday the 9th of January 2015, and starting off with the 5-minute chart, we can see yesterday that the market was trading just below the 17,750 level before the market opened, and then we see the market driving higher as we forecast in yesterday's market alert. So we see the professional buying there driving all the way up to 17,800. And then through the 17,800 we see the market eventually making its way up to the 17,850. But we see this particular price bar here, we see prices coming off the high, and then we've got the telegraph pole there, and then the market driving through this resistance here as well at the 7,850. And then more professional buying and just coming under the 17,900 there. We get a sell signal, but unfortunately it is a winning trade, but this taken out with this price bar here that wants to move to the upside. And of course we've already got this strength in the background, so any short at in this sort of up move where you can see you've got 50, 100, 150 points on the upside is going to struggle. However, that said, the market did move all the way down to the psychological level of 17,850, and then we got the buy signal. So there's 12 to 14 point loss on the first trade there, and there we can see that the market moving back to the upside there. We already know that we've got some resistance around here, which is at the 20-point scalp, but then you've got the psychological line also in place. So from the entry point up to the psychological level there is 28 points on this trade. We then get another trade later on in the session. Again, the market trading between the psychological levels. Again, really powerful stuff this. You've got the buying coming into the this area of 17,850. Also this price bar shows the market dipping through, then coming back and closing above the 850 level there before turning around and moving higher. You've got just 20 points on this trade before the market then finds support at the 17,900 level, and then we've got a buy signal, but this is half an hour before the close, so too close, and then of course the two sell signals as well, which are far too close to the end of the trading session there. So things starting to become a bit calmer, certainly after the initial volatility. So hopefully now we've got this week, the first week, out of the way, as everybody's back to trading, then we should start to see some decent trades from this next week. In the daily charts, we drew in all of the fibs yesterday, and you can see the market driving through all of these and trading up to the 17,925 level, which is here. And if we go back to the 5-minute chart, you can see that's the high for yesterday's session. So let me just draw onto that, and you've got 17,920, which more or less coincides with the 76% retracement that we drew on. And this is a crucial area, because if the market can't take this out, then we're going to see a return to the downside. What will be nice is to see the market come through this, reverse, and then come back, and that would give us a really good indication that things aren't well in the bigger picture of the Dow, which I just scrunch this up a bit. We can see there that we're struggling in this sort of range on the highs at the moment. And let's have a quick look at the news before concluding. We've got FOMC Lacquer speaks, but that's at 6:20, 3 p.m. We've got the GDP estimate. That's forecast at 0.7. Again, not really anything to move the markets as far as the Dow's concerned. So it'll be interesting to see how things pan out today. On the implied volatility front, well, after the up move yesterday, this has dropped from 15% down to 13.13, but the historical volatility playing catch up there. So again, this is going to take a moment or two to settle down, but we'll see what happens today, and then what happens as we go into next week as well. Right, that's it for me for today and also for this week. I will see you in Monday's edition of the Market Alert to see what and analyse what happened during today's trading session. As ever, thank you for support, very much appreciated. And as ever, thanks for watching. I shall see you in the next one.